In the early days, you always want money, to be honest. All early day startups are starving for cash. Globally is going to be close to 1 billion in revenues this year. Some of our brands are established brands, Adidas or Disney, Versace, Hugo Boss.
We have this mantra in DHL that is called show me the reds, because you go to a country and the local management, they love to show you a scorecard that everything is green. They want to see what is broken.
It was a huge price to pay. I used to travel outside home for 5 to 6 days every week for around 7 years.
Learn from the best with Unpacking Success, the DHL e-commerce podcast with Pablo Ciano.
Hello, everyone, and welcome to the Unpacking Success podcast. I am Pablo Ciano, the CEO for DHL e-commerce, and today I have the honor of having with me the founder and president of Global E, Nir Debbi. Nir, together with two other partners in 2013, founded Global E, and today, fast forward 12 years after, they are the leading players in solutions and enablement of e-commerce cross-border. They have been able to accomplish remarkable success. They have almost 4 billion in GMV. They have offices around the world, and they have IPO'd with a remarkable market cap of almost 7 billion. So, Nir, welcome to Unpacking Success. A lot of our audience very likely know what Global E is about, but maybe you can summarize and explain to those that are not very familiarized, what does Global E do?
Global E is the world's leading provider of global e-commerce enablement solutions. Basically, we drive better global e-commerce. We do that by connecting brands and shoppers all around the globe. We remove the barriers for cross-border and for global transactions, such as payments, such as currencies, such as duties. We just take it all from the merchant and simplify his life by giving him an out-of-the-box solution that allows him to give that local experience to the shopper, and of course to the shopper to feel welcome to buy with that brand or merchant as he gets a local experience he would have buying domestically.
If I am a merchant, online merchant in the UK, I am selling domestic, my products in the UK, suddenly I begin to, for some reason, see that I have some inquiries and traffic coming from, let's say, Turkey. And then I will call you and say, hey, can you help me have my online store customized to the preferences of the Turkish market in local language, in local currency, and you will help that merchant have a local presence, still shipping potentially from the warehouse in the UK, but handling not only the user experience in the local preferences, but also the entire data flows as well as payment gateway that will allow someone sitting in Turkey to access a website that will be catering to his or her preferences and products arriving from the UK. Is that summarizing more or less what you do?
You got it quite right. It's actually making the transaction for the merchant as simple as transacting in the UK. So for him, it's a domestic transaction in the UK. For the shopper, it appears as almost a domestic experience within Turkey. In the middle, Global E is actually acting as a merchant of record, simplifying the transaction in all its aspects. If you'd ask Nir Debbi of 12 years ago, will the product be as complex as it is today in all the aspects that it caters? We wouldn't imagine it. If you would ask me if I believe that ever Globally would need 1,200 employees, I would say no. If you would ask us if we would be trading in 2025, 6.5 almost billions of GMV, we wouldn't believe that as well.
Interesting. So you talk about GMV and merchants. I know that many companies look into GMV, and actually their business model is associated to some extent with GMV because their monetization is related to GMV. But if I understand correctly, your business is much more driven by merchants. Or is it the number of merchants that is important to you, or is it the GMV, or the combination of both?
Our financial model is GMV based. And the beauty of this model is that it actually aligns us with our merchants, because we grow when our merchants grow their business. And with that, it's growing my business. So it puts merchant first, and on the back of it, we are able to grow as well. And I think this was at the essence of our success, because over time, it creates a true partnership. Merchants rarely churn from globally. Our gross dollar retentions are over 97% for many years.
Wow.
And our net dollar retention is around 120%, which means that on average, we grow our same client base almost 20% year on year. So we do tend to stick around our clients and grow them, and we're very proud of it.
Talking about direct-to-consumer, how do you see the evolution of direct-to-consumer versus marketplaces? Because in the last 10 years has been ups and downs, where 10 years, 12 years ago, marketplaces were going to eat the world and they were going to do absolutely everything. And direct-to-consumer brands were still trying to understand how to play the e-commerce. And of course, you helped many of them to succeed in that area. Then there was a significant growth of direct-to-consumer as a total share of e-commerce retail. Now the perception and the numbers are pointing to maybe a balancing of more or less 50-50, more or less. So how do you see the evolution of that direct-to-consumer versus marketplaces?
In the past, when we started, marketplaces took a larger chunk, close to 60 or 65%. Over time, we did see a huge uplift in direct e-commerce of the brands. It was fueled dramatically within COVID. 2020, 2021 gave a huge push for merchants to go direct. That created that 50-50 that you see. But within it, what I think the dynamic one step below, if you'd look at it, is completely different between branded goods and non-branded goods. On the marketplace side, the non-branded goods mainly are very successful because they're convenient. It's very easy for the clients to shop with them. They have best prices. However, when you look at branded goods, especially around fashion apparel, you would see a completely different picture on the marketplace side. For branded goods, luxury apparel, I think you see a movement of the merchants to sell direct. It is hurting the marketplaces, and we see much more direct coming up. And it's great news for me, because this is where our business is focused.
Exactly.
For us. It's a good secular tailwind that is pushing our growth.
So you're dealing with a lot of merchants in different countries around the world. What do you see as the common denominators for those that are successful?
Some of our brands are established brands, Adidas or Disney, Versace, Hugo Boss, and they succeed because they managed to build an amazing brand over the years. They've been able to continue and produce products that are adjusting over time to the taste of their clients, and those guys are very successful. However, we see also a new type of brand that is super successful. You see direct-to-consumer brands that are gaining huge traction. It would be Alo, the likes of Skims that is being pushed by Kim Kardashian, and their ability to reach audiences around the world in a very efficient manner. So we do see different models that continue to evolve over time. Some of them are D2C brands that are evolving very rapidly. Some of them even open some physical presence to complement it. And we continue to see growth of the existing traditional brands that just take more and more, I would say, control over the brand worldwide, like Disney or Adidas, that takes, I would say, the license for e-commerce direct in multiple countries out of distribution lines, in order to make it more coherent and enjoy the direct connection with our consumers worldwide.
Interesting. A lot of the e-commerce world, as you know, is around ecosystems. Sometimes nobody understands what is an ecosystem, right? It's super funny.
You need the ecosystem and AI, and you'll sit.
Exactly. If you have in your prospect AI and ecosystem, you are going to be making a lot of money. But there's some reality in this ecosystem. So in particular, the marketplaces you see venturing into payment platform, like Mercado Libre is a great example from my home region of Latin America, where they have succeeded in payment platform, of course, retail, but now also logistics. So they are a little bit building that ecosystem. And also there is some ecosystem for other type of platforms. The entire iPhone and app ecosystem is something that has been built around that technology, Shopify, and we can talk about Shopify in a minute since they are a partner of yours, but Shopify is also a little bit of the concept of ecosystem. It's a lot of developers who are developing things for being utilized by merchants in Shopify. Is there such a thing for globally, that is that concept of a globally ecosystem, like is connecting a lot of different capabilities around the globally solution?
I believe that ecosystem is and will have a critical part in globally success. Globally has more than 300 APIs to different partners in multiple elements. When we speak about an ecosystem, our payments are being driven by 10 different partners that are connected to our environment. Some of them are specialized acquirers in local jurisdictions. Some of them are alternative payments. Some of them would be common gateways, such as Adyen or a Stripe or a WorldPay. If you go into the fulfillment side, then of course there is a DHL, but we have 19 other carriers that globally is integrated to in order to provide multiple solutions, different service levels across different geos. All of it are services that are actually integrated into my platform, but they are part of my ecosystem, and that goes into on and on. It would be the e-commerce platform. You spoke about Shopify. All of them are part of our not only integrations and APIs, but they're part of my ecosystem. Some of them are driving my growth and success. Same also with, to be honest, with DHL. We had a mutual growth together. Some of it is fueling my success with referring relevant clients that speak about cross-border or wanting to do more to globally and actually supporting our growth. It's all part of the ecosystem. And if you want to hit scale, I don't think you would find a lot of examples that are able to do it without a supporting ecosystem. So it is a big word, but I do believe that it has a lot with it.
Yeah. Of course, properly executed can bring a lot of value as you are describing. So how important, let's go back a little bit to the original days. How important was in the early days to have a strategic partner like DHL? Not only because of, I think, of course, we contributed with funding, which was, I assume, required at that point in time and needed, but was there more than the money? Was there value in any other way?
Yeah, in the early days, you always want money, to be honest. all early day startups are starving for cash. When after you go out of a round, you have a runway that is around anything between 18 to 24 months. So in the next 12 months, you need to open another round. So half of your life, at least until you become cash positive, you're actually running after money. And this is one thing that is critical. The partnership with DHL is much broader than money. Money, we could have recruited stupid money that would just give us money and stay on the sidelines. I think the investment of DHL was on the back of a strategic agreement that helped globally to have visibility for our brands on shipping prices for a 2 or 3 years forward looking plan without any surprises. It allows us to streamline a lot of the pain points that they had with the DDP offering, with time-definite offering, on demand, and few other things that we got linked. And a lot of it we got prior to what anyone else in the market. Some of the solutions related to clearance and duty drawback, we actually built together with DHL and consultant. And that was, I would say, the strength of the partnership. It was very close together with the management. And I think it helped to evolve a lot of the solutions that you see today in the market. So I think it was a critical pillar in our success.
You have now another big partner, a big player in the e-commerce market, which is Shopify. We briefly talked about it. Shopify is your investor, partner, frenemy, enemy, competitor, because they play in a very broad spectrum of e-commerce solutions. So how do you see them?
Shopify is today the largest stakeholder in globally. It's been a long journey with Shopify. We started working on the Shopify platform, I think, around 6 years ago. In 2021, just prior to our IPO, we reached an agreement with Shopify to get exclusivity for cross-border end-to-end MOR solutions on Shopify. I think it did great for Shopify and for us. We expanded the partnership. We made the acquisition of Flow Commerce. And on the back of it, we were granted also by Shopify the ability to power behind the scenes their managed markets solution. So today, globally, is a standalone third-party solution selling our solution direct to Shopify merchants, as well as Shopify selling managed markets that behind the scenes is being powered by Globally through the acquisition of Flow Commerce. So we have a very broad partnership.
Excellent. Do you envision other similar partners at that level, the level of Shopify or big companies that you would like to see with the same level of connection with Globally?
I do believe that we can have another 2-3 strategic partners, the same as Shopify or DHL over time. I do believe that there's a lot more to do. And below that strategic level, I do believe we need to continue and expand our partnership network, because if we want to continue at scale, to grow at scale, and Globally is going to be close to 1 billion in revenues this year.
Wow.
And if we want to continue and grow at this scale, it's a 30% per annum, 25% per annum for the next 5 years, then I think that a lot of this drive would come out of channel partners.
Impressive growth that you are experiencing. So which sector or customer segment, combination of customer segment and geography or lane is the one that you are seeing growing the fastest?
Today, the growth territories would be APAC, because we just launched them, I would say, around 2 to 3 years ago. And now we are reaping the fruits of that successful launch. We see tremendous growth for Globally across Japan, Korea, Australia, Hong Kong, Taiwan. So quite a lot is coming out of APAC. If you look back into 2019, 2020, we had nothing in those territories. Today, it's almost at 10% of our business. Global e-commerce is becoming more complex.
Yeah.
When you look at a merchant that needs now to change and add 20% for country of origin, China, sending into the US, for them it's a huge project. Someone in IT need to give that priorities. They need to change their pricing just for those specific products. They need to integrate a solution that now is a DDP solution, maybe if they haven't had it before. So it's a huge change. And for us, we make it simple for our brand. So over time, I believe it will bring more merchants to trade with Globally. So
we are fully aligned there, right? Because to some extent, the complexities that you handle on the front end are the complexities that we need to handle on the back end with all the physical movements and customs clearance. And that complexity has been evolving in the last 4 years when all the entire China plus one and diversification of supply chains. We have identified 20 countries around the world that are benefiting the most from this diversification of supply chains. Many of the ones that you have mentioned, but of course the usual countries like Mexico, India, Vietnam, Turkey, they are becoming more and more centers of manufacturing for supply chain. And we are seeing that those, to your point, right? We are seeing those supply chains getting more complicated, and companies like Globally and all the logistics providers like DHL, they could help alleviate the pain of managing those supply chains. Some random questions to cover other important topics. Private or public? If you could go back to being a private company, would you prefer to be a private company?
Personal preference, I would choose to be a private company for sure. I think that the ability to plan long-term is easier with a private company. When you're public and you're measured on a quarterly basis, it's much harder to make steps that are long-term steps, because a lot of your effort is to set and explain the quarterly results, when the grander picture, even on an annual term, looks okay. But within it, you have some flexibility, you have some volatility, and then everybody is concerned with what's happening. Yeah. So, however, for the company, and a company that wants to get to a certain stage and grow from it, being publicly traded allows for a lot of benefits. First, it's a vote of confidence to have larger merchants that are now that want to be partner of a publicly traded company. So it has its benefits, to be honest, on that side. It has its benefit also on being able to raise more money, significantly more money than the private sector, and also do transaction on your stock. So as a publicly traded company, you can actually use your stock as a currency. And that allows you a lot of flexibility. I think that we made the right choice going public for globally.
Are you working more or less or different compared to the early days of when you created the company?
I do work hard today. I think it's in my nature. I don't think it's not, no one forces you. It's your own business. You run your own life. However, I don't think it's the same as it was in the early days. The early days, I used to travel outside home for 5 to 6 days every week for around 7 years. I used on average to spend 2 nights on a plane. There was a huge price to pay. When I started the company, my daughter was 6 months old and my son was born around 12 months into having the company. And they used to see me for a day and a half a week for the first 6-7 years.
I think that we all have gone through that. I remember that with my third kid, I didn't wait for my wife to leave the hospital with the baby. I had to travel to Latin America. So she's still passing the invoice for that to me. But as you are saying, now when we are a little bit younger and we are in the early stages of our respective careers, we need to do what we have to do. But you might be exposed to a lot of different type of pressure these days. As you are saying, you are a publicly listed company. Quarter after quarter, you close this quarter and you're already thinking, as we all are, in the next quarter and the guidance and satisfying investors. How much is that pressure? And also, how do you cope with that pressure?
That pressure do exist, but I think that's not my greatest concern, to be honest. I think that over time, we can meet over time and we will exceed over time market expectations if we deliver constant value for our clients and maintain a reputation. And if you'd ask me what my greatest concern is the company is growing dramatically. When we IPO'd, we were like 300 people in the company. Today, we are 1,200, and we continue to grow. How do you get this culture of client first, commitment of people to maintain the same as we had back in the early days, back pre-IPO, today where we are 1,200 people in the company and I walk into one of our offices around the world, they don't actually know who I am. But still, I expect them to have the same commitment to clients that we had when I knew each and every client by name and they could call me at any time and they knew and they knew me in person. So we have a lot of training, etc., in order to make sure that we don't lose a sight of the ball. And the ball is actually keeping the reputations of the clients happy. Because if we do that, over time, we will make all other things happen. Like
very true.
If the clients are happy, if they stick with you, if they give recommendations to others to join you, this would be, I would say, the thing that I think takes a lot of my time today.
Yeah, very true, very true. And as you say, you're growing so fast and keeping that mindset and culture. Are you implementing any management hacks or programs, or how are you keeping that customer-centric mindset?
I think it's a matter of one, the culture that you created. It's a matter of the people you recruited. In terms of the processes, to be honest, I try to spend as much as I can first with the first line people in globally. So I would try at least once a quarter in every region of the world to have a day with the customer success managers to listen to them. What are the clients saying to them? Are the clients happy? What aren't they happy with? And I like to hear, I would say, mainly what's not working, because from what's working, I don't learn a lot.
Very much in line with, we have this mantra in DHL that is called show me the reds, because similar to you go to a country and the local management, they love to show you a scorecard that everything is green.
Green.
And I say, well, if I travel all the way to here and I only see greens, maybe I will not come again, right? I want to see what is broken. And I think that it's great to hear from you that you are growing super fast, which is an example, and you are keep on focusing on the customer centricity. And of course, you being founder and having, been there for a while, you continue taking the time to talk to customers. So it is, beautiful insights and very much appreciated. So Nir, I think that I have taken enough of your time. I have asked you a lot of questions of a lot of different topics, beautiful insights, and thank you for your advice. I think that the audience will very much appreciate all of that coming from someone like you who has done it and created an amazing company. Of course, on behalf of DHL, thank you for your trust and looking forward to continue growing both businesses together. So thank you very much. Thank you for taking the time and all the best.